The ATO has made some very public statements in recent times around the use of self-managed super funds as part of an aggressive tax planning strategy, or as a component of that. So I think that's a real focus for the ATO at the moment. We have seen the alerts around dividend stripping and the determinations around buy-sell agreements. So those particular areas I think are a real focus for the ATO, ensuring that self-managed super funds are not being inappropriately used in those fashions. Also around limited recourse borrowing, of course, we're still waiting to hear the response by the government from the FSI recommendation that limited recourse borrowing rules should be repealed. So I think that's a big ticket item for the self-managed super fund sector, and even though I think it's unlikely that the government will act on that recommendation, I think it's likely that we may see some tightening around the rules of limited recourse borrowing. The session is intended to be a rapid-fire legislative update session. So the objectives of the session is to bring self-managed super fund practitioners up to date with some of the recent ATO announcements, and also some recent changes to the legislation impacting on self-managed super funds. I'll start off with a look at the new refunding rules around excess non-concessional contributions and some of the topical self-managed super fund strategies that have emerged off the back of those new rules. So we'll look at that. Some of the ATO rulings, the alerts and determinations that I was referring to before about dividend stripping and buy-sell agreements. We'll have a look at what the ATO has been saying in those announcements. Of course, UK pension transfers. It's been a real roller coaster ride this year for UK pension transfers. It was only a couple of months ago that it looked as if you wouldn't be able to transfer UK pensions into any Australian super fund, including self-managed super funds, but there's been some interesting developments in recent times, particularly for self-managed super funds, so I'll talk about what those developments are. We've also seen the ASIC advice guidelines. ASIC came out a few months ago now with some guidelines around self-managed super fund advice, which were designed to try and help practitioners disclose the risks associated with self-managed super funds. So we'll have a look at what ASIC is saying in those guidelines, some of the important compliance tips that they've also included in those guidelines, and I'll raise, I guess, some of my own concerns about the way the industry may choose to respond to some of those guidelines. And we'll finish off the session with a look at the government reviews, the current state of play with the reviews that are currently in place, with a specific look at the minimum pension rules, and they're currently being reviewed, and what changes, if any, may occur to those minimum pension rules, and that's quite topical at the moment given the volatility in the investment markets.